Hi, and welcome to my monthly market insights video. My name is Dan Timotich. I'm a managing principal and a portfolio manager at T2 Asset Management. Before we get started, this video is for educational purposes only. Opinions expressed in this video are mine and do not reflect the opinions of others. You should always consult with a financial advisor before making any investment decisions. Investments involve risk and are not guaranteed. So after an unbelievable August, looks like stocks took a little break in September. As you may remember, August had its best performance since 1986, and I was trying to remind everybody of what happened in September of 1986. And it's not unusual for stocks to take a break after such a great month. And my biggest point was that we needed to be cautious given the possibility of a pullback in September. And so while the S&P 500 was down just about 4% for the month, it was actually down as much as 7.5% by September 23rd. However, the market did stage a late month rally, which did help pare some of those losses. This here is a chart from last month's video where I showed how lopsided the market had been. Here we have all of the stocks in the Russell 3000 with the exception of 5. All of the performance of the S&P 500 was driven by those 5 stocks, and the question was, can the S&P 500 continue running up without the help of those 5 stocks? So let's take a look and see what those stocks did in September when the market was down. Well, as goes tech, goes the S&P 500, it looks like. The market was down about 4%, but as you can see here, Apple, Facebook, and Google were all down over 10%, followed by Amazon, which was down nearly 9%, and Microsoft, which was down just under 7%. When you have 5 companies representing over 20% of the market, it should be no surprise that any hiccups with those 5 companies will have a real impact on the overall market. Now, I realize that we're still dealing with the impact of the virus, and many major cities and states, they remain closed, hoping for a vaccine. And while many pundits keep talking about the need for a vaccine before we can get back to normal, I think the market is really being driven by something completely different. The market is 100% dependent on free money. Right now, the federal government has already provided $2 trillion in stimulus, which is, by the way, about 10% of our annual GDP. The Fed continues printing money at an unbelievable pace, and it's now officially monetizing our debt. Just think about that for a minute. How great would it be if you could just run up your personal debt to unsustainable levels and then simply buy back with your own debt? Buy back your debt with additional debt that you'll never have to really pay back. I mean, think about that for a second. What could possibly go wrong in that scenario? But, the Fed has expanded its balance sheet to over $7 trillion and has said repeatedly that it's going to continue to do whatever it takes, which in my understanding means that they're going to continue to print money as long as needed. And that leads us, obviously, to yield curve targeting. Now, the Fed has stated that they don't want to target the yield curve, but they basically are. When you have the 10-year Treasury at around 77 basis points and inflation's running at about 1.7%, that doesn't happen naturally. There's some outside forces that are controlling rates, and in my opinion, that's the Fed. So expect more money from the federal government. The Fed is clearly running the printing presses in overtime, and yields are going to remain low for much longer. This is what the market wants, and the complacency in the market can be justified under this scenario for quite a while longer. Okay, so we're only a few weeks away from the election, and while many expect the election to be contested to whatever degree, I wanted to take a look at some of the outcomes and share what I think the impact will have on the markets. So there are basically 3 outcomes under both Trump or Biden. So let's take Trump first. Trump winning first since he's the incumbent. If the Republicans sweep both chambers, it'll be great for the markets. Trump will continue reducing regulations, opening markets, infrastructure spending, etc. Basically a replay of 2017 and 2018. Now, if Trump wins and Congress stays the same, still good for the markets. We had a great market for the 2 years. For 2 years, and it wasn't. If it wasn't for the coronavirus, I think we'd still be doing extremely well under this scenario. However, if Trump does win and the Democrats sweep both chambers, I would expect the market to have problems. Democrats have will certainly block any major policy initiatives from Trump. And Speaker Pelosi is already talking about 25th Amendment issues, which basically removes a president. This will not be a good outcome for the markets because it'll be continued investigations and trials and all of the things that we've seen over the last year and a half. But it will be done with both chambers. Now, let's take a look at a Biden win. Again, if he wins and the Republicans sweep both chambers, it should be good for the markets. But Biden won't be able to implement any major policy changes or do much of anything outside of executive orders. While positive for the markets, it'll be less positive since Biden will be able to reimpose a lot of regulations, obviously through executive orders and the such. Next, we have a Biden win with Republicans holding on to the Senate. Again, generally positive for the market, just because the Senate is going to be able to block any efforts by the House to move forward any sort of a radical agenda. And finally, blue wave, where Democrats control everything. This would be the worst scenario for the markets. The outcome will fundamentally change the structure of government, the economy, and basically a free market system. But basically, just to sum it all up, the worst outcome for the markets would be the blue sweep. The second worst would be a Trump win with Democrats controlling both chambers of Congress. The other four outcomes should all be generally positive for the markets with varying degrees of positivity. So with all of this, what am I doing now and how am I positioning portfolios going into the election? I'm still a bit underweight equities in general, but I have been adding exposure over the past couple of weeks. I've started implementing a barbell approach to stocks. On the one end, I started adding exposure to what we call reopening stocks. I think the economy will reopen much faster after the election, and so I've been adding small caps and even started adding energy recently. However, you still have to hang on to what got you here. Big tech names are still driving performance, and while they may be considered shutdown stocks, they will continue to perform even if the economy fully reopens. We've just been too embedded with these services from these major companies to really make a significant shift. I do expect stimulus money to come, additional money to come. We may not get the money before the election, but there will certainly be some coming in the months following the election. And finally, I think 2020 will be a lot stronger than people may think. We will have enough therapeutics for the coronavirus by the end of the year. The economy is going to be reopening. And with nearly a quarter of our economic output being pumped by the government, the economy is certainly going to regain steam going into 2021. That said, it's wise to keep some dry powder until after the election. After all, there's 2 out of 6 chance that the election results will negatively impact the market, so you want to be careful. I think it's a good idea to still hold some cash and invest selectively in specific sectors. You may not get 100% of the upside, but you also won't get 100% of the downside. There is still risk in the market, and whenever the market is as complacent as it is, any hiccups can certainly spike volatility. As always, I appreciate you watching my video. I look forward to hearing any questions or comments you may have. And if you do have any questions, feel free to email me or call me. Again, have a great month, and I look forward to seeing you next month.